to get into the next session, Steve. I'm sorry we're running a little bit late with getting you in here, but Steve Primo is a guy I've been working with for a couple of years now. He runs, he's the lead educator, I guess is the best way to put it, for a company called Specialist Trading. I've actually helped him kind of put his initial methodologies into MetaStock. He's been a valuable partner for us, and we certainly appreciate that. Also, the stuff that he kind of talks about is stuff that I really, really like as well, which is why we invited him in today. So with that being said, let's go. He's been here for a while. Let me go ahead and bring him in as a panelist. I need to actually upgrade him to an organizer as well. Okay. And so now we can see your screen, Steve. I can't hear you quite yet. Can you turn on your microphone, and we'll just make sure that's coming through as well?
Yes, hello. Can you hear me all right?
I can. You might want to just make it a little bit louder, move the microphone a little bit closer to your face, or to your mouth.
Okay. Is that any better right there? I'll turn up the volume a little bit.
Yeah, it sounds a little bit better. I'd go a little bit further.
Okay. I want to welcome everyone to this presentation on the right way to trade tops and bottoms, and I want to thank Stocks and Commodities and MetaStock and Jeff Gibby for giving me the opportunity to speak. And thank you to all of you people here and coming into the Online Traders Summit. This promises to be a great presentation. I'm going to give you a technique that I first learned on the floor of the Pacific Stock Exchange on how to trade tops and bottoms. You can start using this as early as next week if you like. So stick around, and this promises once again to give you a lot of great free information. Now, also, to tell you a little bit about myself and Specialist Trading, we are first and foremost an educational company. Even though we provide our members and our students with strategies and tips and techniques that I've accumulated in my career, it's more about teaching you and empowering you with this information and then mentoring you along the way so that you can ultimately make your own trading decisions. Now, I've been trading for roughly 37 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette. I traded through the crash of 1987 and the great bull market that followed afterwards, and I left the floor in the mid-90s to manage money and to also pursue my own trading account. And around 7 years ago, I started Specialist Trading, where all I do is teach and mentor my students all of the things that I've accumulated in my 37 years, and also things that I personally trade with myself. So this is what we're all about. Once again, we're more of an educational company, hoping to empower you with all of this information. Now, before I begin today, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this entry technique for tops and bottoms, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, I'd like to mention, while you're taking a look at our disclaimer, we are on Twitter now, so I invite each and every one of you to follow us on Twitter. There's our handle there, at SPCLSTTRADG. We post on a daily basis anything from financial wisdom to actual signals we're in. In fact, last week, I believe Tuesday, we posted a signal that was generated to go long the markets, the E-minis and the S&P 500, and I think we generated roughly about 150 points in the Dow, or 22 points in the S&P. So it's a great signal, so feel free to follow us on Twitter. All right, now a little bit about the philosophy. Once again, we are an educational company, and the reason we are, first of all, is because I know a lot of people think that, well, boy, since you had your start on the stock exchange floor, you were born with a silver spoon in your mouth. It's easy to make money if you're down on the floor, but I always tell my students in my presentations and webinars that that's not true. In fact, my first year or two trading on the floor, I struggled tremendously. It was tremendously frustrating because I couldn't really make a dime. I would have, maybe 3 or 4 great trades or great months, and then the next one I would give everything back. And so I was basically just treading water for my first year or so. My mentors, who finally turned my way of trading around, said that the reason I was not being consistent in my trading is because I was holding on to conventional wisdom. In other words, trading everything I had been taught or learned. But the point is that what they shared with me is that they said, Steve, conventional wisdom usually doesn't work. That's why there are roughly 80 to 85% of all traders ultimately fail. So what they said was to simply drop that, and they showed me ways in which to simplify my trading. And this is what turned my trading around, so I was able to become consistent, and this is what I share with all of my students and members at Specialist Trading. We're trying to let go of conventional wisdom, things that you've been taught or learned that are supposed to work that ultimately really don't. I'm sure if you're frustrated right now with your trading, I'm sure you're very familiar with this. It's very discouraging, and you put in a lot of hard work, you go to the seminars and you study a lot, and you don't have the results that you're promised you're looking for. So we're about educating you so that you can empower yourself and actually make your own trading decisions. This is what we do at Specialist Trading. We're an educational company, and we're there with you every step of the way. Okay, so we're going to start out with sharing you how most people trade tops and bottoms, and just a couple of things before we begin. I know a lot of people like to ask questions during the presentation, but we're limited on time, so I'll take the questions at the very end. Oftentimes, if you have a question about a particular slide or technique I'm sharing with you, it's explained in the next slide or so. So if you have a question, just wait till the very end, and we'll reserve the last 5 or 10 minutes, okay? All right. So as I stated, most people usually trade tops and bottoms the same way, and I know this once again from firsthand experience because this is the way I used to trade on the floor. I would do great, and I thought, boy, this is fantastic, until it didn't work, and then I'd give everything back. So I'm just going to share with you a common technique for the way the majority of people like to trade tops and bottoms. After all, this is what we're taught, right? You want to buy low and sell high. So let's look at stocks first of all. And once again, if you just came in, let's reserve the questions for the very end so we can take advantage of the time we have left. All right, if we look here, here's a chart in Caterpillar Tractor, a cat. As we see here, we have the chart plotted, and we just have a standard stochastic oscillator, okay? We're not going to try and optimize or use some type of tremendous indicator. This is just your standard stochastic that is MetaStock, and all we want to do is just look at the overbought, oversold situations, because this is what we're taught. We are taught to buy in oversold conditions and sell in overbought. So if you're just using the standard stochastic oscillator, and you can use anything, it doesn't matter if you wanted to use another momentum tool or if you wanted to use something that you've created. It doesn't matter just as long as it is supposed to be telling you when something is overbought or an oversold condition. So as we see here looking at Caterpillar back in April, when we get to the point where we are in the so-called oversold area, when the lines cross, this is your indication to buy, and boy, that worked out pretty well. And then when we get in the so-called overbought area and the lines cross, that's your indication to sell. So this is working out great, and this is the way most people trade overbought and oversold. I know, once again, because this is the way I used to trade. But the only trouble is once we get to this point here, once again, you decide to buy, and you figure, boy, I'm doing well. I've had 2 good trades, and it doesn't go your way. But that's okay. You've made some money off the first couple of trades, so you decide to buy some more, double down, and you purchase once again once these lines cross over in the so-called oversold territory, and it rises a little bit but goes lower and lower and lower until ultimately you've given everything back that you made on the first 2 trades. All right? Or how about the E-mini S&P? We'll see this will transfer over into that market as well. Now this is a 5-minute chart of the E-mini going this past month. As we see here, we have the same tool plotted on the bottom. We have a 5-minute chart, and when the lines cross in the so-called overbought territory, that's where you want to sell. And it works out pretty well until we get to the oversold area, and then you cover your short and go long. And at this point, you're thinking, boy, this is amazing. I'm going to be a millionaire by the end of the year, and all my problems are solved. And now you get another setup to go short. So you sell at the so-called overbought territory, and it doesn't really go down. So you decide to double down again, until ultimately you've given everything back, and now you're in the losing column because it continues to go higher and higher and higher. Now we can also see this phenomenon for Forex. If you have if anyone out there is a Forex trader, it actually, you'll see this a lot more because the currency pairs seem to trend a lot stronger than stocks and the E-mini markets. As we're looking at this chart here, the Swiss franc, we see here that we are in the so-called overbought territory. The lines cross, that's our indication to sell because it's so-called overbought. So we go short and it comes down a little bit, but then it starts to rise up again, and we haven't got a chance to cover because it hasn't gone in the oversold territory. So we double down again. Now we triple down, and now we are totally wiped out. We have no more money left in our account, and I'm sure this probably looks familiar to a lot of people because this technique will work until it doesn't work. There's no consistency to it, and at Specialist Trading, our whole goal is to just achieve consistency in our trading. We're not trying to hit home runs. We're just trying to be in sync with the market and achieve some level of consistency so that we can trade 20, 30, 40 years down the road. Now, this is the way I was trading roughly 30, 35 years ago, and I was having a terrible time doing it. I didn't think I was going to be on the floor much longer because I couldn't make any money. So my mentors ultimately took me aside, and they saw I was struggling and how discouraged I was. And they really changed my way of thinking, because what they said is, Steve, there is no such thing as overbought or oversold. And that was the first thing they told me to really change my mindset. And I started to think about it, and after a while, at first I rejected it, but after a while I thought about it, and things will go as high as they want. Sure, every once in a while they'll stop at these so-called overbought, oversold levels, but ultimately things will go higher and higher as much as they want, and things will go as low as they want. We've seen equity issues go down to zero. So it's really a recipe for disaster trying to pick overbought, oversold conditions, because there is no such thing. They will work until they stop working. So I finally had to get rid of that mental attitude where I was trying to sell things in so-called overbought and buy things in so-called oversold. But then I thought, well, what is the right way to trade tops and bottoms? Because that's, after all, that's the title of this presentation, and they were supposed to help me trading this way. And so they shared with me a technique, and the first thing they said is the right way to trade tops and bottoms is to simply go with them. And I thought, what do you mean by going with a top or bottom? What does that mean? And so here's the technique I want to share with you, what they shared with me. But once again, you notice I say this is a technique. I'm not going to give you a full-fledged strategy, because it isn't a full-fledged strategy. It's just basically an entry technique for taking advantage or exploiting tops and bottoms. Later on in the presentation, I'll share with you how you can get a full-fledged strategy that we have. But I'm just sharing with you an entry technique, okay? So I know a lot of you are going to say, well, where do I place my stop? Where do I exit? This is just an entry technique. We explain all of that in our courses, though. All right, so let's look back at these charts again. We go back to Caterpillar Tractor. Now, originally, we tried to pick tops and bottoms. What my mentors taught me is they said, the very first thing you must do with any chart, with any market, with any time frame, all right, I'm going to say that again, with any chart, any market, and any time frame, is you must apply a 50-period simple moving average, all right, as we have right here. And then you ask yourselves, where is price in relation to the 50-period simple moving average? I'm going to repeat that again. You may want to write this down. Ask yourself, before you pull the trigger anytime, where is price in relation to the 50-period simple moving average? Why? Because if price is above, then you'll only be looking for buy setups. That's it. If price is below, you'll only look for sell setups. So as you see here, Caterpillar Tractor this entire time was below the 50, so there is no way in the world we should have ever even tried to purchase Caterpillar Tractor. We're not concerned with any buy setups. Why? Because the stock is below the 50. The only thing we want to look for are sell setups, regardless of what strategy or technique we're using. So you see right off the bat, we've already decided how we're going to be trading. We know we're only looking at this from a short point of view. All right, so we know now that we're below the 50. Now what do we do with our so-called overbought, oversold tool? And remember, it can be anything. I just happen to have the stochastic, the standard stochastics. I didn't alter or edit anything. You can use any other momentum tool or anything you devise. It doesn't matter. Okay, so since we're only going short, now we want to locate the so-called areas on the indicator we're using that tells us we're oversold. Why? Because we're going to exploit that. Because there's no such thing as oversold, as you can see here. So what are we going to do? Every time we had a so-called oversold condition circled in red, we want to look for the short-term bottoms that were created, as you see here with these red horizontal lines. All right? Now there's lots of other bottoms created, such as right here, short-term bottom, but it wasn't in the so-called oversold. We only want to take advantage of the ones that were created in the oversold area. And once we violate those by 1 to 5 ticks, that's our signal, or that's our entry point. And it's that simple. So do you see now where before you would have lost a ton of money trying to pick a bottom because the oversold indicator kept going lower and lower and lower. Now we're in sync with the market and we haven't lost any money. Remember, this is just an entry technique. How about the E-mini? All right, before we had a couple of really good trades, but then all of a sudden we started to get short and it kept going higher and higher and higher. So how do we trade with this particular 5-minute chart? Well, we apply the 50-period moving average. That's it. It automatically tells us what type of setups we should be looking for. Now, if price were below, we would be looking for sell setups. But since price is above, we're only looking for buy setups. You see how simple this is? It's so easy, now you know what side of the market to be on. All right, so since we're looking for buy setups, now we want to exploit the so-called overbought territory, circled in green here. All right, so this is the so-called overbought territory. Now we search for all of the areas where a short-term top was created. A short-term top is just a little high. It's like a pivot high. And so once that top is violated by 1 to 3 ticks, we just simply jump on board and buy. So in this scenario, we would not have lost any money trading the E-mini on a 5-minute time frame. We would have made money. And then finally, looking at the Forex chart, the Swiss franc, the same technique applies. We do not change anything or alter anything because of the market or the time frame. Now we're looking at a daily bar. We add the 50-period moving average. We ask ourselves, and you may want to write this down and post it on your computer screen just so that you always are aware of asking yourself this before you buy or sell any strategy. Always ask yourself, where is price in relation to the 50 periods of the moving average? In this case, price is above, so this means we're not even going to consider shorting the Swiss franc. There is no way in the world my students would be looking to short the Swiss franc. We're only looking to go long. All right? We're not going to try and pick a top because we know that ultimately that's a recipe for disaster. That may work 3 out of 4 times, but on the 5th time, as you just saw, we'll give everything back. So there's no consistency in that type of trading. It's similar to going to Vegas and playing the slot machines. Every once in a while, the bells will go off and you'll get a winner, and it'll give you this false sense of security that you're actually making money. But over time, you'll look and see in that you actually haven't made anything because the odds are in the favor of the casino. Just with this, the odds are in the favor of the market doing whatever it wants to do. So since we're only going to be going long the Swiss franc, we want to take advantage of the so-called overbought territory, circled in green. Every time a short-term top or pivot high is made, that's our area of interest, and if they are violated to the upside, 1 or 3 pips, we just jump in and buy. So before, where we were trying to short the Swiss franc and we kept doubling up, tripling up, and finally we blew out our account, now we've got a solid profit. Okay? So do you see how simple this technique is? Do you see how basic but how well it can work for you? This is what my mentors taught me. So let's look at some more examples, and then we'll go and show you all of the examples from each and every market and different time frames. And then I want to share with you some actual things that happened as recent as yesterday. Okay, so let's start out with stocks for all you stock traders out there, and we'll start looking at Amgen. Okay, this is a chart of Amgen, fairly recent, coming into November, and we see here that for the majority of the chart, we were above the 50 period, but we had a small little dip here below. So we want to look at these overbought, oversold conditions. Now, every time we were in the so-called overbought, we're looking to go long. When we're in the so-called oversold and we're below the 50, we're looking to go short. So we look for those short-term tops and bottoms, and here were the tops that were created in the overbought territory in green. Here's the low. Now, we never went below that low, so there was no trade that took place. So that was great. This kept us out of the market, and the only thing we did was go long. And you see here how you could have traded Amgen and done well trading this from the long side. How about Apache Corp, APA? Okay, obviously we're only going to be going short. Why? Because price is below the 50-period simple moving average. It's that simple. Do you see how much money this can save you by not trying to pick a top or a bottom? So we're not going to try and pick a bottom in Apache Oil. We're going to try and go with it. We locate the so-called oversold areas. We find where the short-term bottoms were made in those oversold areas, and that's our point of entry. You think you could have done well trading Apache to the short side. And remember, I know that some of you trade options. We're not an option class per se, but you know, our methods are easily transferable. You just could have gone long the puts on this, and you could have done just as well. Or how about AVB? Okay, Avalon Bay, we see here a daily chart. Now, obviously, we are above the 50, so we're not even going to consider shorting this. I know a lot of people would say, boy, well, there were some nice tops made here that you could have taken advantage of. That's okay. Once again, we're not concerned with that. We don't want to sell at the very high and buy at the very bottom. Our only mission is to be consistent, and the way you do that is by being in sync with the market. So since the market is telling us it's going higher in this chart coming into September, we're only going to be buying. We're only going to be piggybacking along with it. So here are the so-called overbought areas within this 5 or 6 month chart. So we look for the tops that were created, and once those are violated, we just jump on board. Okay? Someone trying to short Avalon Bay during this past 6 months would have had a very difficult time sustaining their account Why? Because they're trying to buck the trend. Just go with it. It's so much easier. And the beauty of it is you don't have to spend all this money for some, very expensive indicator or tool or something. It's just a 50-period simple moving average. You can. This is on every charting software platform that you have. MetaStock has it, as you see right here, plus the stochastic. You can use this technique as early as Monday if you'd like. How about Barrett Gold? Now, obviously, we're below the 50. This is going back to September all the way into the beginning of November. So we're not in any way thinking of going long gold. I know that there may be some indications that it's bottoming out, but that's fine. We're not going to try and pick a bottom. We only go when we have confirmation that we're in sync with the trend. So the trend up until the beginning of November was down. So we take advantage of the so-called oversold areas. We look for those bottoms that were created. And how easy is this? You just enter once those bottoms are violated. This is a great entry technique. I know a lot of you, once again, are saying, well, where do I get out? Boy, with a profit like that, do I just stay in it, or where do I place my stop? Remember, we're only sharing with you in this presentation an entry technique. All of those we teach and mentor in our courses. Oh, how about Halliburton? We see here that we kind of have two scenarios. We're originally above the 50, and then we went below the 50. Could this technique have applied in both scenarios? Sure. We see here that we have the so-called overbought circled in green on the stochastic, and then the oversold territory. So we just look for those short-term highs in green, and then we look for the short-term lows. So when we were above the 50, you would have entered to go long at all the areas right here once the tops were violated. There was another top here, but we never went above it, so you never would have gotten long anymore. And then once we had consistent closes below the 50, now you can go short and go the other way. All right, so we share with you stocks on daily chart patterns. Let's look and see how this can apply to the E-mini. Now, if we want to start out with a different time frame, let's look at a weekly chart of the E-mini, all right, going all the way back to the beginning of 2012, so roughly about over 2 years ago. We see here that going back to the beginning of 2012, price has been above, on a weekly time frame, above the 50. So looking at this on a weekly time frame, there's no way we should ever have considered shorting the E-mini. I know we had a very large sell-off about a month or so ago, but according to this, if you're trading weekly charts, we're not going to consider going short the E-mini. We're only going to be going long until we have consistent closes below the 50 period. We're just buyers. And so far, it's worked out really well for the last 2 years. Now, if we see here, we have nothing but overbought, so-called overbought territories in the stochastic. So we just want to go long once those are violated. And look how well you could have done during this past, all through 2012, 2013, and 2014. So almost, actually, 3 years, actually. Now, that's a weekly chart. Let's go to an hourly chart. All right, this is an hourly chart going back to the 10th of October, just about 3 weeks or so ago. Coming into the 9th or 10th of October, we had consistent closes below the 50 period. So what does this tell us? It tells us we're only looking to go short the E-mini. Well before the market fell out of bed, the market had told us by having 2 or 3 closes below the 50 that you should be on the short side. We don't have to listen to outside sources the way I used to, waiting for economic earnings or listening to guys on TV or chat rooms. All we have to do is listen to the market. So the market told us, like on the 8th or 9th, that we're getting ready to go short. So once we were below the 50 on an hourly time frame, we look for the so-called oversold territory, and then look for those lows that were created in the so-called oversold territory. And once they were violated, that's your entry. Okay? We can even go down in a smaller time frame. How about a 5-minute time frame? This was last week, I believe. We were oscillating between being above and below the 50 period simple moving average, but ultimately we were above the 50. And these are all the so-called overbought areas of being above the 50. So we just simply mark the short-term highs that were created in the so-called overbought territory. And once they're violated, that's our area to buy. This was on a 5-minute chart just last week or so. And I want to share with you something that happened yesterday. Okay, we can go down even a smaller time frame just to show you that this works on daily, weekly, 5-minute, 1-minute charts. Here's a chart of yesterday afternoon, starting roughly about 1 p.m. or 10 p.m. Pacific time. The market had consistent closes below the 50-period moving average. So what does this tell us? It tells us at this time on a 1-minute time frame, we're only looking to go short now. All right? So we're only looking to go short. If we wanted to use this technique, all we have to do is locate the so-called oversold areas. And yesterday, you could have started going short and made a quick 5 points in roughly another hour or so, just being short and using this standard technique. Now lastly, just to share with you how well this works in any market, in any time frame, this also can be applied to the Forex markets. In fact, I think this works even better on the Forex because of their tendency to really trend very strongly. Here's a chart of the Euro-Yen. This is a weekly chart of the Euro-Yen going back to roughly 2012, in November 2012. We've been above the 50 period, so right off the bat, I don't care what somebody is saying on TV, I don't care what someone's saying on some website, don't short the Euro-Yen. All we're doing is looking to go long. See how simple this is. You don't have to waste your time, energy, and money listening to people or buying things. If we're above the 50, we're only looking to go long, and we're looking for setups. Now this is just one setup. We look for the so-called indicator to tell us that we're in the overbought territory. We look for those tops that were created, and that's our entry point. Once those tops are violated, that's our entry point. Now that's in a weekly chart of the Euro-Yen. Let's go to the Euro-Dollar, a daily chart coming into November. The Euro-Dollar has been falling out of bed. It's been going down for many, many months, all the way since May, as we see here. All right? A lot of people have been trying to pick the bottom in this currency pair, and they've been getting killed trying to do that because it doesn't bottom out. It continued to go lower. So remember, as my mentors taught me, there's no such thing as overbought or oversold. Currency pairs, stocks, futures will go as high or as low as they want. So it's a recipe for disaster trying to think that you can pick a bottom or a top. It may work once or twice, but when it doesn't, you give everything back. So if you want to be consistent, ask yourself, where is price in relation to the 50-period moving average? All right, price is below. So since May, you would have been only looking to go short the Euro-Dollar if you're a currency pair trader. Just using this technique out of the many techniques that we have, you would have looked right here and seen that these are all the so-called oversold territories. So we just simply look to go short once those short-term bottoms are violated. And you think you could have done well shorting the Euro-Dollar. The only people that really lost money these past 4 or 5 months in the Euro-Dollar were people trying to buy. All right, we're not going to try and even consider that. We're just going until we see that the trend has changed by price closing 2 or 3 times above the 50-period moving average. All right, so before we get into any questions, there are 2 points to remember. And remember, these are extremely, extremely important. These were the things that were taught to me. As I cannot stress enough, when I was trading on the floor, I used to trade this way. So I'm not just saying this from an arrogant or a condescending point of view. This is really the way I used to trade. I used to try and pick tops and bottoms. In fact, I tried to pick a bottom during the crash of '87 when I was on the floor, and you all see how that must have worked out. Okay, so that would it just it would work fine until extreme conditions arise, and then you give everything back. So it's a recipe for disaster. So my mentors finally got me to really confirm that, you know what, you're right. Never ever try to pick a top or bottom. All right, it ultimately will come back to get you. And you'll see that there is no consistency. It's really like going and gambling. It's more of a gambling mentality rather than an actual professional trader mentality. Gamblers are always looking for the big score. And when trading, when you get a big score, the only way you can do that is by picking the exact bottom or picking the exact top. That's a gambling mentality. We never want that at specialist trading. We want to be more professional. We want to just simply go with it. All right, so trying to pick a top or bottom is similar to playing the slot machines. It's similar to feeling really good every once in a while when you have a nice little win here and there, but over time you're going to see that you really didn't make any money at the slot machines. All right, there's no odds in your favor. It's the same way with picking tops and bottoms. So, as my mentors taught me, you really have to get this mindset that there is no such thing as overbought or oversold. There really isn't. Just look at the charts I just shared with you. Go back and look at some of your experiences in trading where you shorted something and it just kept going higher and higher and higher. And you met all the rules to your strategy, your system, everything was perfectly met, all the requirements were met. Why did it keep going higher? It was supposed to top out. Or something you bought because it was tremendously oversold, there was no way it should be this low, and it just kept going lower and lower and lower. After all, it met all the conditions and requirements of your system or strategy. Why does it keep going lower and lower? So there's no such thing as overbought or oversold. Issues, currency pairs, futures will go as high or as low as they want. So a much more conducive way to being in sync with the market is just listening to the market, figuring out what it wants to do, and then just jump on board. It's so much easier to being consistent as opposed to trying to pick tops and bottoms. So before we get to any questions and answers here, just ask yourself, and I want you to be honest, do you think any of the edges I shared with you today could have helped your trading this past year? Let's just take just one of the edges. Let's take the 50-period simple moving average, okay? Something that simple. Go back as a homework assignment right now before the next speaker and look at your last 10, 20 trades. I can almost guarantee you that your losing trades were the result of you being out of sync with this simple rule. In other words, you got a buy signal and it didn't work out. But now that you add the 50, you were going long because you were below the 50. And I can almost guarantee that the ones that did work out were because you were in sync with this rule. In other words, if you got a buy or sell signal, you were in sync with the 50-period simple moving average. Okay, so this is a great technique that has literally helped me to make and to save thousands, if not hundreds of thousands of dollars in my trading career. So do you think that that could have helped you at least? Or how about just the entry technique of picking these overbought and oversold conditions and then rather than trying to use them to go long or short, exploiting them? Once a short or a so-called bottom is made, rather than use it to buy, use it to go short. Do the exact opposite. So these are great techniques, once again, that were taught to me. What if I could give you anywhere from 5, possibly 10 more of these techniques? Totally different, but similar in their ability to elevate your trading to the next level. Well, once again, this is what we do at Specialist Trading, and I want to share with you a great offer we have for all the attendees today. It's a 3-hour training session of me speaking about many more edges and telling you more ways in which to trade just the way I did today. Remember I said we are an educational company, so this is a great educational video. What this is a 3-hour video of a seminar I spoke in Denver just a couple of years ago, roughly. And we had hundreds of people came to see me, and we had it videoed. And now we have this for all of our members as a Secrets of a Stock Exchange Specialist video seminar. In the seminar, I talk about more high probability trading edges such as the ones I shared with you today, totally different but just as valuable in your trading. We tell you which indicators to use and not to use. I go over the difference between a system and a strategy. I share with you what I feel is the #1 chart pattern that you should always be looking for. Regardless of what time frame, regardless of what market you trade, this is the #1 chart pattern that can really get you on that road to consistency. How to be on the right side of the markets, and I think probably the best thing about this video is that I give you the complete rules to a strategy, probably one of our most consistent pullback strategies. That's strategy #1. Now, if you know today I just shared with you a consolidation technique. That's really all it was. Really not a pullback technique. It was just a consolidation, and we were waiting to go long once something, or go short when it broke out to the upside or out to the downside. With strategy #1, we actually are looking for pullbacks or sell-offs to go long within the trend, and we're looking to go short on rallies within the trend. In fact, let me show you some recent signals that our members were privy to who are in the strategy #1 course. Here's 3 buy signals in Ross, as we see here, coming into October. These were all buy signals that were generated using strategy #1. You can see here that we have an uncanny way of buying on getting the buy signals on these pullbacks. So, you know, a lot of people would say, well, Steve, I thought you didn't try to buy on the lows or sell on the highs. Remember, this was according to the strategy, in sync with the trend. So if we are in sync with the trend, we're not buying on a low, we're simply buying a pullback. Now conversely, if we look here at Fastenal, we see here on the beginning, just about a month ago, we had a nice pullback to the upside. According to the strategy, we were in a down mode, so we got a great short signal on the 6th, and look what happened. These were 2 sell signals at the beginning and the middle of October last week in Netflix. As you see here, the market gapped down much lower, but the strategy already knew that we were in some type of a downward trend, so it didn't even try to pick a bottom. All we were doing was going with the flow, and this was a nice pullback to the upside. 2 sell signals you could have taken advantage of. This also works on the futures. The great thing about strategy #1 to all of our course members is that all the rules and everything can be applied to whatever market you're looking at. If we look here at the weekly chart of the E-mini, these were all buy signals all the way going back to the beginning of 2013, just a few years ago. All buy signals, and you can see we got long on all these sell-offs or pullbacks. So you got really good prices, and you were able to take advantage. You can also go down to a 5-minute time frame. This was just a recent chart of a 5-minute time frame where the market was heading lower, I believe, at the mid part of October when the market was really falling out of bed. These were all minor pullbacks within the trend. As you see here, those little bounces, strategy #1 was generating sell signals on each and every one of these. And you can also apply this to the Forex markets. We look at the Canadian dollar here. We have some nice signals here in the beginning of September all the way up to the end of October to go long the Canadian dollar. So this is the strategy that we're actually giving in this 3-hour presentation, all of the rules. If you remember today, I just shared with you an entry technique. I didn't really go into where to place your stop, where to exit, anything concerning money management. All I did was talk about an entry technique. Strategy number 1, we give you all the rules. We tell you exactly where to enter. We tell you exactly where to place your stop. We tell you how to use money management. We show you where to move your stop up if you have a nice profit in place. And this is 3 hours of trading techniques, things that I've accumulated in my 37-year career, things that I actually use on a daily basis. This is our Secrets of a Stock Exchange Specialist training session. Now, I want to tell you that on our website, or our sister site, which is Pro Trader Strategies, they market and promote all of my different courses and techniques. They have advertised this for close to $1,000. But for all the attendees today, guess what? It's free. It's free to the first 500 traders. So you're going to get this 3-hour online course totally free. If you're interested in getting all this information, hopefully you can take your trading to the next level. If you see here in your chat box, we've posted the link that will take you there directly, and you'll get, once again, this is all free. It's an online course. It's not something that's free for 2 weeks or a month and then expires. This is yours for life. It's yours to keep. So if you look in your chat box there, we have the link posted. You can go there and get all the information. Remember, about 10 more trading techniques. We tell you all this information on how to apply to any market, any time frame, my personal email address, and then lastly, all of the complete rules to one of our most consistent pullback strategies, which is strategy number 1. Okay, totally free, but to the first 500 traders only. This is with our conjunction with MetaStock and Stocks and Commodities for the Online Traders Summit today. So, for more information, if you just want to talk to anyone or just have more information about this, what we offer, or any of our techniques or strategies, you can go to our sister site, which is protraderstrategies.com. Once again, they market and promote all of my courses and strategies. And there's their email address, trading@protraderstrategies.com. You can call them directly at 310-598-6677. And right below that you can copy and paste that onto your browser. That is the link to get the special free offer for the Secrets of the Stock Exchange online video course. Or you can go to click on the link in your chat box. I believe it's posted right there, and you can automatically go to that spot. Now, I want to thank you all for waiting. If you happen to have any questions, I'm going to open up the question and answer box for now and try to answer. I think we have about 10 more minutes or so left, and I don't want to take time for the next speaker, but let me just go back here. I just want to make sure that I'm not going to be answering Steve Bigelow's questions, because we have all the questions here. Let's see. Someone is saying they keep getting an error when they're trying to submit my details in the link. I'm not really sure if that's if that applies to us or whatever. Yeah, I'm not sure. Yeah, if you're having trouble with that link, then here's what you do. Go to the more information of the page that's right in front of you, as you can see right there, and just copy and paste that onto your browser. I'm going to keep this up for a while, so don't worry. If there's an error, there happens to be some error with that, don't worry about that. Maybe Jeff can do that. That says there's an internal server error. We apologize. But you'll still get it for free, don't worry. And just all you have to do is go to as you see right here, the bottom link in front of you where it says infusionsoft.com/app. That is the actual link. So just type that in. And if there even happens to be problems with that, don't worry. What we'll do is we will you can call us up directly at the phone number provided, or you can email them, and they will send you that as well. Okay, just want to make sure that you understand. Don't worry that you haven't missed anything. Let's see here. Yes, it's an error message. Sorry, I apologize that. Oh, I see. Gloria is saying that the address works, but the registration does not. Just try the first one, kind of with details, and then it came up with an error. So we apologize that. If you see on the right-hand side there, there's another one that has been posted at the right next to Kelly Clement. There's another way. You may want to try that. I'm told, as you see right there in the question and answer, that's working now. Yes, I think it was probably maybe a problem with GoToWebinar, but either way, it's all fixed now. Okay. L.A. Decker says, thank you, Mr. Primo. I'll be joining up in the next 2 weeks. Oh, great. Well, thank you. And remember, as I stated in the very beginning of this presentation, we are first and foremost an educational company. We are, in other words, we're not about, even though we have strategies and signals and we post them on Twitter and we give them on a signal service to our members, we are in no way trying to just give these and force feed you the signal so that you can just blindly take them. It's been my experience in 37 years that really, once again, that'll lead you down a road of disaster because you really don't understand what you're doing, and you'll be just blindly taking signals, and you'll ultimately fail. I want my students and members to become a part of the process, and the way they do that is through sound education. Just the way you saw me giving all the attention to detail today, trying to educate you in this entry technique. That's what we do with all of our techniques and strategies. I just gave a 2-hour course yesterday teaching another strategy as well to all of our course members because we want to make sure that you understand it. Then, once you understand it, we are there with you every step of the way. Once you're a member of Specialist Trading, you're a member for life. And we are there with you so that we can mold and fit to meet your needs. Some people like to trade it conservatively. Some people will like to trade aggressively. This is why we're there with you so that you can ultimately get on that road to consistency. So we are an educational company. We are not about in any way trying to just force feed you signals so that you take them on a nightly basis. We want you to understand so that ultimately you don't have to rely on an outside source to make your trading decisions. You can rely on your own process, okay? I go to the website to get the free video. Yes, Joe asks us if he goes to the website. You can go there, but I think it would be better, Joe, to either call up that number or to actually send an email in front of you or go to the link. I'm told the link works now. Let's see. Steve, have your secrets video and strategy in before? I've put, oh yeah, I'm sorry. Roger says, I have your secrets video and strategy before. I put so much focus into strategy before, I forgot about all the wonderful content of the secrets video. I'll definitely give it another look. Well, thank you, Roger. Yeah, Roger is a student and member of ours, and strategy number 4 is a entirely different strategy. It's probably our most popular strategy because it works tremendously. But that's another strategy altogether. But I'm glad he's having success with that. But there's still a wealth of information in this 3-hour video seminar, okay? Benjamin is saying it's $37, but actually, that once again, I think is the error. It's totally free. It's free for the first 500 people. So I would say just keep trying it, and it should be okay. Yeah, I think Kelly just posted something as the organizer. What is the correct link? And so that should be working fine there. It's just right in the question and answer boxes. And you just copy that one down. Steve is asking, Steve, have you ever tried using the 50 EMA? Okay, that's for the exponential moving instead of the 50 SMA. Hi, Steve. No, I haven't personally, but remember, there is nothing wrong with using a different time frame or a different, even a different type of moving average. The main thing that we want to instill in our students is to use it as a tool to let you know what the overall trend is. So in other words, we're not using it for signal indicators for telling us where the entry is and where the sell or where a stop should be placed. We're using it just to tell us whether we should be going long or short. That's it. So I want my members to get in the habit of asking themselves, where is price in relation to the 50? Now, if you feel more comfortable using an exponential, that's fine. But the main point is that if price is below whatever indicator you're looking at, you should be going short. You should only be taking short sales. If price is above, you should only be taking long setups. That's it. So it doesn't matter if you're using one of my strategies or using one of yours. You will be or give yourself a higher level of consistency if you use that simple rule. Now, I personally like the 50 because it transfers over so well onto any market or time frame. In other words, if I'm trading a 5-minute chart of the E-mini, it doesn't really do much for me to tell me the overall average if I'm looking at a 100 or a 200 period moving average. It's just, that's too big. It encompasses too much, and it's not giving me a clear indication. It's too slow. Now a 20 or even a 13 may work well for a 5-minute time frame, but then again, what if I'm trading a weekly bars? Well, a 13 or a 20 period moving average does not work well. It's too fast for a weekly bar. Therefore, I want to use something larger, maybe 100 or 200. If you want to just use something that works well in every time frame, the 50 fits all. It's like one-stop shopping. That's why we always suggest the 50-period simple moving average. We want to keep things simple. We don't want to tell you, well, when you trade tick charts or 5-minute charts, use these 2 different moving averages. When you move over to weekly charts, and then you have to switch over and do, it gets too complicated. We want to keep things as simple as possible, so the 50 works well. That's why we use it. But the main thing is to use that concept. If price is below, don't even think about going long. Just don't do it. I know it's going to hurt in the beginning because you'll say, boy, I missed a great trade. But for every one you miss, there are 3 or 4 that you would have gotten in that would have lost a lot of money. Okay? All right, let's see if we hear. I see some people are still having trouble. A lot of people are saying now that they thank you so much. I had successfully registered for the free video. Great. So I assume the link is working now. We're sorry to hear about that. And let me just see what else is here. As Vincent says, after I registered, the site came back with an internal survey. Yeah, you know what? I think they have posted the correct information, so I just want to make sure that you have it in front of you. I was going to switch to the disclaimer page, but we'll keep this in front of you. So remember, you can always send an email, and you can get that. It is free, though. Julie, it is free. Don't worry. It's free to the first 500, but I think we're going to pretty much, because there's a server error happening right now, we'll let you all have it. But that should be the link I'm seeing here. A lot of people are getting it. But it should be free. If you're having trouble, once again, just email, or if you're lucky enough to just phone call, you can do that, and it should be. But I'm seeing here a lot of people are saying that they did get it. People are asking, when do you get the video? It's an online course, so all it does is you get the link, and it's yours. You can watch it whenever you like. Save it to your browser, and you can watch it. It's a 3-hour video, so there's a ton of information there, and you can have it whenever you like. So it'll really help you. There's so much information there. Remember, this is information I've accumulated in 37 years. So it's there for you totally free. I mean, it's taken me this long to accumulate it and to apply it and to use it. We're giving it to you just for our association with MetaStock and Stocks and Commodities. It's yours for free. Okay. Maverick is saying, I already bought your Secrets of a Stock Exchange Specialist seminar and Specialist Trading seminar months ago, and it's excellent. Oh, thank you, Maverick. I appreciate it. I appreciate the testimonial. Yes, there's tons of great information, and once again, it's totally free. If it says $37, just contact them, and it should be not worried about that. Don't worry. They will give it to you for free. Okay. Let's see if there's more questions about that. Yeah, mostly, I really apologize. Most of the questions are about trying to get the link. And because we've had problems, don't worry, we will extend this offer. This is usually just a limited thing, but we will extend it because we just want to make sure that you're able to. We're sorry that we're having server problems. Let me see if there are any other questions about the 50 period or whatever. One thing I really want to stress, which is different from what I taught today. What we teach in the course is entirely different from what I taught you today. So don't feel like you're going to get the same thing again. I teach you about what I feel is the #1 chart pattern, which is a tremendous chart pattern that you'll be able to find and see extremely easily and simply, and you'll be able to apply this to any strategy you have. Okay, but you're looking for this. I also teach you about other ways, the difference between strategy and system. I also teach you about ways in which to be on the right side of the market. But I think the most important thing is we share with you how to actually trade strategy #1. We give you the complete rules. So it's really an informative presentation, 3 hours of great information that is yours to keep. Okay. Let me see here. I keep getting this signal. What about commodities? That's a good question, Samson. Works fine in commodities. Well, first of all, everything I teach works in just about every market and time frame. Now, I personally don't trade commodities, but we have tons of students who do, and I'm constantly getting testimonials telling me how well it works with them. So this is something that hey, if it's works for them, that's fine, and that's good enough for me. And they tell me that the same things that I teach for stocks and E-mini will work just as well for commodities, such as gold, oil, heating oil, and things of that nature. I mean, just think of oil, crude oil, this last month or two, how it's been going lower and lower. If there was any way you could have applied what I taught you today, do you think you could have made money using that simple technique of going with it? I mean, the only people that have really lost money trying to trade heating oil are the ones that are trying to pick a bottom or crude oil. Don't try to pick bottoms if you're going against the flow. So had you used that simple technique of the 50-period simple moving average, you would have known this entire time we're just looking to go short until we close above there. Works on gold and silver, and it also works with T-bonds and just about any other market you can think of. So it works great. Okay. I keep getting this message. I hope this is not turning anything off. Someone is asking Mark, saying, does it work on Forex? Yes, Mark, it does. I showed you a bunch of examples where it did work on Forex. I showed you weekly and daily charts. In fact, in my opinion, it works even better on Forex. But if we're talking about strategy number one, yes, it works tremendously on Forex. We got some really nice buy signals in I believe it was the Canadian dollar using strategy number one. So it works really well, extremely well. Okay. And this is all for free in the course. Let's see if there's any more questions before we have to get ready to sign off here. I think we just have a few more minutes. Again, the link, as you see there, I want to thank Kelly for posting it. The link to register is right there. Kelly just posted it right there with a little check next to it. So that should be all right. I see some people are getting it okay, so that's fine. Mark is saying, what's the time frame you use on the Forex with strategy number one? Well, you know, it works well in any time frame. I mostly apply it to daily bars, but we have students that intraday trade strategy number one on the Forex markets. So, you know, I think there were some really great short sales on the Australian dollar this past month using strategy number one. So that on an intraday basis. So, you know, it's entirely up to you. But I personally, when I'm viewing the Forex markets, I personally only look at daily bars. But it's up to you. You know, there's nothing that changes or nothing that is, you know, we're not a systematic company where we keep records of the 5-minute as opposed to tick charts, as opposed to hourly, as opposed to daily. You know, we're just an educational company. You can decide what meets your needs. But we get feedback from our students all the time telling us how well it works in any market and or time frame. Okay. Let me see a few more questions before we have to sign off here. C was asking, great, but why do you give it for free? I love it, but what do you get in return? I know there is no free lunch in the world. Listen, what we do is hopefully we'll get you to come back and to become specialist trading members for life with another course. We had so many people that, as I think there were a couple of emails I already read, or a couple of questions I already read where people said, I love it, and I now trade strategy number 4 as well. Hopefully, you know, it's just like, you know, giving away free samples at a restaurant. If you give away a free sample, if the people like it, they're going to come back. It's just good business, and it's good. It's showing you on our part what our intentions are. We're not trying to, you know, give you something. If you don't like it, that's fine. We totally understand. It doesn't meet your needs. That's fine. But you didn't waste any money. We don't want you to do that. We're an educational company. We're not about selling you and having you, you know, hook, line, and sinker. Just like a company, if you go into any coffee shops, gives you a free sample, they're hoping you'll come back again because you like the product and you'll buy more. Same with us. We're just hoping you like it. If you don't, it didn't cost you anything, and it's, you know, we still leave on good terms. Now, before we close, I just want to show you our disclaimer here. Remember, we showed you a lot of information, a lot of, you know, trading techniques today, and we share with you a lot of things that work and that don't work. Please remember, though, that we showed you this performance results. I cannot guarantee that they will be repeated in the future. So please remember to review our disclaimer. Also remember to join us on Twitter if you'd like. We have a lot of great information. But remember, we do not post a signal the minute it happens on Twitter. We will tell you maybe hours later or days afterwards, just so that, you know, it doesn't take advantage of the people that are part of our membership that see those signals as well. Okay. Let me just see if there's any last questions. I see this. I see some people are still having trouble with it, but other people are doing quite well. So I apologize once again for that link. The people at Pro Trader Strategies I know are probably scrambling, but don't worry, we will reserve that offer for people if you didn't happen to get in. If you tried to get in, it is totally free. Don't worry. We'll probably extend it rather than just 500 traders because we've got such an outpouring. We may have crashed the system. That's probably what happened because we had so many people trying to get it. So we apologize for that. But it's a browser problem, and you already have, I see we already have about, Brett Marsh is telling us, he's the president of Pro Trader Strategies, that we already have 400 signups. So the link is functional. So we already have that. If you did have a problem getting in, don't worry, they will take care of you. But I would try to do it as soon as possible. But so far, they've been already notified that they already have at least 400. Okay. All right, thank you so much to Stocks and Commodities, to MetaStock, and to Jeff Gibby, and thank you for attending today's Online Traders course. And I want to also just say that I look forward to you purchasing any other techniques or trading strategies we have, and I look forward to you all becoming members of Specialist Trading. Thank you, Jeff. If you want to get set for the next person, we can get set up, and I'll just leave this information right up here.
Hey, we're all set for the next person. It happens to be me. Okay, great. Thanks, Steve. We really appreciate you coming in today. Great session. Apologize for the problems with the promo code. I think we just killed it. I mean, we have a very sold-out session today. So, there's a lot of people in the room. People, what a great event. I really appreciate everybody that came in to take a look at the sessions. I hope you're enjoying it as much as I am. And wow, we're going to do this a little bit more frequently coming up in the future. So I'm going to go ahead and change the presenter over to me so I can share my screen with you.